On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Hello, we're on day 2 of the Precious Metals Summit, and I'm with Peter Beckney, the Director of Corporate Development over at Gold Royalty. Peter, good to be with you again.
Good to be back, Peter. Thanks for having me.
I can't believe it's actually been 12 months since you've been on. Usually you're on a bit more than that, but in that 12 months, your share price has tripled. I feel like we've missed some big milestones, really. You're now a $800 million circa company. The evolution that we've been talking about ever since you were on this show, 4 or 5 years ago at Beaver Creek for the first time, it's now starting to bear fruit.
Yeah, I mean, in the last 12 months, it's been really rapid growth in the share price, and credit that to a few things. Obviously, the gold price helps, going from $2,000 upwards to $3,700 an ounce. We've seen that lift all ships and new incremental capital come into all stocks. But for Gold Royalty specifically, we've transitioned from promise to delivering.
Yeah.
We've delivered positive free cash flow over the first 2 quarters of 2025, something we had always said was coming. But now with our portfolio really starting to ramp up, 3 key assets really hitting production thresholds this year, and future growth out towards 2029. I think we're finally starting to get credit for that within our share price.
Yeah. So the 3 that are coming on, so you got Ren, Cote, and then Cozamin as well?
Yeah, so those are a few of our producing development stage assets. In 2025 specifically, it's Cote, IAMGOLD's asset, performed really well through the first half of the year. We expect that continued performance in the second half. Borborema, or a minerals asset down in Brazil, they're expected to achieve commercial production this quarter, so really any week now. And then finally, Varus, the recent acquisition from 2024, it's been ramping up relatively slowly through the beginning of the year, but just recently announced Dundee Precious Metals, or DPM Metals as it's called now, has agreed to acquire Adriatic. So we're quite encouraged by that validation of the asset, but also for that asset to be in the hands of an experienced, diversified producer to really get the most out of it. Beyond that, as you mentioned, Ren, one of the assets we're super excited about, Barrick has recently disclosed that they expect that asset to be producing 140,000 ounces a year starting in 2027, which is less than 18 months away now.
Yep.
And then the flagship Odyssey, 2028, when Canadian Malartic shifts to a fully underground operation. With all those assets, most of them being brownfields developments, we put out our 5-year outlook, our inaugural 5-year outlook. So we're growing from 5,700 to 7,000 gold equivalent ounces in 2025 to close to, or a midpoint of 25,500 gold equivalent ounces in 2029. So the highest growth rate in production of any royalty and streaming company. And again, over 80% of that growth is on satellite deposits, existing operating mines. We don't have to wait for financing. We don't have to wait for permits. That growth is on long life assets.
Yeah, and this is something that we've always spoken about. One of the reasons why I've really enjoyed and have liked this story is that these, like you said, they're established assets, but they're the largest mining companies in the world that are building these things that actually know how to operate. Yeah. Okay, so that's quite exciting. So talk us through year-on-year growth then. Look, what's that now looking like?
So from 2024 to 2029, reaching that 5-year outlook, we're looking at over 360% growth.
Wow.
Total.
Yeah.
Relatively linearly, as we see those 3 key assets I mentioned, full year of production from those in 26, Ren and Odyssey really kicking in through 27, 28, and then 2029 seeing that geo profile start to mature. Beyond our 20 some odd development and cash flow assets, we have over 200 exploration assets.
Yep.
Now that's obviously not in our geo production profile, but it adds significant optionality. Assets that could ultimately become mines later next decade. And to that, we see over 350,000 meters of drilling this year. We've seen over 2 million meters of drilling conducted across the portfolio since we first met back in 2021.
Wow.
So a lot of optionality, a lot of investment by our operating partners, which for us as a royalty company comes completely for free.
Okay, one of the big announcements that you made, I think last year, was obviously the Adriatic deal. Mm-hmm. How are things going on the ground? I'm sure you're keeping up to date with production profiles and whatnot. How's that now looking?
2025 has been relatively modest, and with Dundee coming in there, they'll really look to optimize that asset.
Yeah.
Big company profile, take a big company approach. So what that means for our 2025 guidance, DPM hasn't outlined that yet, but it's incredibly encouraging to meet that full run rate through 2026, and then look at expansion potential beyond that. Okay. And in addition to Varus, where Adriatic had outlined expansion potential, we see that expansion at several other assets. You look at Borborema, they're looking to move a nearby road, so to expand the reserve, and they're also looking at increasing throughput by north of 50%. At Odyssey, only 1/3 of the mill throughput is being utilized in the current mine plan. Agnico Eagle could significantly increase annual production from the underground by filling that vacant mill capacity. So we're really excited about those areas of upside on expansion potential.
I think this is part of the reason why sort of gold price lifted ships, especially with the optionality of the royalty space, is that not only are you going to be increasing your revenue anyway because of the high gold price, everyone that you have that you're partnered with and that you have royalty on is looking to maximize output because of the gold price. So you've got this sort of like double whammy approach moving forward. Something that is quite exciting in the royalty space at the moment is we are starting to see a bit of M&A. Like I said, again, gold prices is obviously helping that. You just said at the beginning we're in a bull market now. What's the general feeling within gold royalty of M&A potential moving forward?
Yeah, well, we've been a consolidator in the past. It's how we grew the portfolio in the beginning to where it was. Ultimately, I think with a rising tide, we're seeing 3 deals so far this year: Origin, Sandstorm, now EMX Elemental. I think as the gold price continues to rise, people will be motivated to see further consolidation. How that plays out is to be seen, but I also think you're going to see broader consolidation within producers, operators, and not just in the gold side. Timely this week with Teck and Anglo. Yep. I think M&A is going to be a common thread at least through the remainder of this year and into 2026.
Yeah, well, one of the things that you did at the very beginning was use your good sort of market cap and your sort of strong share price at the time to go out and acquire these other assets. This time around, obviously, you're sitting there with 750, 800 million market cap today. Are you seeing yourselves as the acquirers or to be acquired? What's the rationale within the camp now?
I think you look back where we were, we had a existential need to go and grow the portfolio, get critical mass, get that cash flow. As we sit today, we have one of the strongest organic profiles of any royalty and streaming company. Incredible growth on the back of extremely high quality assets in the best mining jurisdictions in the world. I think we always see the potential to achieve additional scale, the multiple advantage you get with achieving that scale in the intermediate, and then the seniors trading almost at 3x NAV these days. But in doing so, we'll maintain that view that we've had over the last 12 months, patience and discipline, looking at value accretive deals that are going to improve net asset value and cash flow per share metrics of our business, and finding value in M&A. So I think we're always looking at opportunities. It takes a big funnel. We've looked at almost 500 opportunities since our inception and only executed on a handful. So we continue to do that, but we're in an enviable position with a world-class portfolio, and anything that we execute on now will be very targeted on.
Okay, interesting. You mentioned price to NAV there. Historically, even looking back a year or two ago, when you looked at the comparables of the price to NAV chart and gold royalty, you always had a relatively low price to NAV compared to some of your peers, and there obviously looked like there was a lot of room to grow, even just on that basis, without the gold price and everything else. Where are you sitting now, roughly within that sort of peer comparison in terms of price to NAV, do you think?
Yeah, we've seen an uplift on PNAV multiples across the board. I mean, the seniors going from 2-ish to 2.5. The intermediates going from 1.2, 1.3, now trading closer to 1.8 times NAV. And for us at Gold Royalty, we were trading at 0.5 or 0.4 times NAV at some points last year. And I think that was really due to our cash flow profile. I mean, we were promising free cash flow in the future, but it wasn't hitting the financial statements yet. We're now at a position, it's not just a promise of the future, we're delivering it quarter over quarter now, and that's why we're getting the credit we are in the market. You've seen a lot of the small caps, and us included, trading around 1 times NAV or a touch above that for those with a bit more optionality within their portfolio.
You just mentioned there that obviously you're now quarter on quarter cash flow positive. What's the strategy? Because obviously you had a dividend strategy. You said you wanted to wait for that sort of that cash flow to then really start coming through, which you've now got this great 5 years ahead of you. I mean, Jesus, the amount of cash flow coming through this business is going to get quite impressive. How do you now start pivoting to, I guess, repaying debt, maybe even looking further forward to dividends?
Yeah, I think we're going to have the benefit of free cash flow coming in quarter over quarter. We've got a relatively light amount of debt on the balance sheet relative to our market cap, 27 drawn against our revolving credit facility with BMO and National Bank. And then we do have 40 million in convertible debentures with Queen's Road Capital and Taurus funds. Those convertibles are callable at the end of next year, and with our free cash flow profile, paying down that revolver will be a priority use of proceeds. So we're effectively getting close to zero debt at the end of next year. And from there, as the free cash flow continues to come in, we can look at new growth opportunities, adding new assets to the portfolio, using some leverage with the flexibility we'll have at that time for that as well. But also potentially looking at shareholder distributions. I think any policy we would put in place, we would want to have progressive and sustainable with a view to grow as our cash flow profile grows. But that's not something to promise. That's a good problem to discuss when we're there.
Yeah. You just mentioned something there and just reminded me, obviously you have this partnership with Taurus. How's that? I think that's now what, a year in establishment now? It must be around that.
Yeah, around a year with Taurus from 2024. And that agreement is a way for us to source more opportunities, but also a way for us to hunt for bigger fish. Any opportunity over $30 million, a single asset, precious metals, royalty, or stream, we'll show our colleagues at Taurus. And for those that don't know, Taurus is a private equity fund based in Perth, or based in Australia. And they have a specific royalty and streaming investment fund that we work with. So we'll share opportunities with them, they'll share opportunities with us, and we each have the right to co-invest between 25 and 50% in that opportunity. Not the obligation, we don't have to, but we get to look at it.
But you get first dibs, basically, yeah.
And then, so what we could do alone, they have obviously deep access to capital as well, so we can look at bigger opportunities than we normally would with Taurus. And then also with Taurus being a fixed term private equity group, we'll have the opportunity or the first right if they look to divest those assets in the future.
And does that also include, say for example, they go and buy a royalty and you're not involved in it? Do you then get first right on those ones?
No, it's just where
it's just the ones where you co-invest.
Yeah.
Okay. Yeah. And how's that relationship working? Is that something that you think is quite a big opportunity for you in terms of looking at new deals moving forward?
I think, as I mentioned already, you need a big funnel. You need to be able to source opportunities through whatever connections you can and find a bilateral or a unique avenue to compete on opportunities. And Taurus gives us one of those potential angles. It's tough for us to compete against the likes of Wheaton and Franco or other areas of disruptive capital coming into the space that may have 0% cost of capital. So we need to find an angle, and that's what we've been able to execute on over the last 4 years, and it's those targeted opportunities we'll continue to look to pursue. But as I mentioned, we're not in a place where we have to do deals. We want to execute on the right deals right now.
Yeah. This time next year, obviously we spoke a little bit about this growth profile and whatnot, but this time next year, we're sitting here again, what do you think you're going to be telling me?
I think as we sit right now in the gold market and reflecting 12 months ago, it'd be naive to know exactly where we're going to be in 12 months. I don't think I would have guessed we'd be at $3,700 an ounce gold today. Who knows where we're going to be in 12 months? I think there's going to be a lot of M&A within the space in the next 12 months. But if we focus on what we can control, our operating partners continue to deliver, we'll be that much closer to our peak cash flow years. The value of the business will therefore increase over time just through the passage of time. And we'll be in a place to be almost debt-free at that point. So a pretty flexible and enviable position in 12 months, and I'm quite bullish for the prospects ahead.
Good, Peter. Thank you.
Thank you very much, Peter.